If you've tried to keep up with crypto news lately, you've probably gotten whiplash. I mean, one headline is screaming about record highs, and the very next is warning that a total collapse is just around the corner. It's confusing, it's chaotic, and honestly, it brings up a massive question that we're going to unpack today.
So what is it? Are we riding an unstoppable bull market straight to the moon? Or is this whole thing a massive bubble that's just waiting to pop? In this explainer, we're going to dig into the powerful and, frankly, contradictory forces that are pulling this market into completely opposite directions at the exact same time.
So you'll see a headline like this one. The NFT market, a space that a lot of people had already written off, suddenly rocketed up 21% overnight. Its market cap flew past $6 billion. And you think, okay, the crypto comeback is real. But that feeling, well, it doesn't last long. Because then you see this. An analyst firm is waving a big red flag, warning that altcoins and Bitcoin aren't moving together like they usually do. See, historically, when Bitcoin goes up, the altcoins follow suit. But this time, they're kind of doing their own thing. And that disconnect, it suggests something is off under the surface, making that optimism feel pretty shaky. And just to really give you that final dose of whiplash, you get this. A single cryptocurrency, XRP, rallies so hard that its market cap, for a moment, is worth more than Shell Oil, a legacy energy titan. So how? How can a market be so euphoric and so fragile all at once? Let's try to make sense of the chaos, and we'll start with the bull case.
All right, so to really get the bull case, you have to look at the forces driving all this growth and optimism. And honestly, some of the numbers are just staggering. They tell a really powerful story about momentum. Let's kick things off with Dogecoin. All it took was one single massive purchase from one firm to send its price soaring by 64% from its recent low. Now, that is the kind of explosive, headline-making move that just screams bull run.
And it's not just the meme coins getting all the love. We're seeing some serious cash injections from the corporate world. GameSquare Holdings, for instance, just casually dropped $30 million to beef up its Ethereum treasury. That is a crystal clear bet on the platform's future. And here we are again, back at that $6 billion number for the NFT market. Look, this wasn't some slow and steady recovery. This was a lightning-fast 21% surge in a single night. That signals a huge return of investor confidence in a sector many people thought was basically dead. This really shows that it isn't just everyday investors getting hyped up. The big institutional players are doubling down. You've got MicroStrategy just constantly buying more Bitcoin. Block, the company formerly known as Square, gets added to the S&P 500. That's a huge deal. And overall, digital asset investments are seeing record inflows. This is the definition of mainstream financial acceptance. And beyond all the trading and the price charts, the actual technology itself is getting more mature. On a foundational level, you have Ethereum gearing up for a major upgrade to make it faster and more scalable. In the development world, platforms like Pi Network are seeing an explosion of new apps. And when it comes to adoption, Polygon's stablecoin supply is at a 3-year high, which tells us its network is being used more and more for actual stuff. So, a rising tide really does seem to be lifting a lot of boats here. It's not just about Bitcoin. You've got XRP rallying hard. Solana is knocking on the door of $200. And then you have coins like Conflux seeing these massive 50% plus surges. The enthusiasm is broad, it's spread out, but that's only half the story. Now, for every single one of those growth drivers, there seems to be an equal and opposite force of risk pushing back. So let's flip the coin and look at the bearish headwinds that are causing some serious concern for investors and analysts out there. And let's start with a number that is just a brutal reality check. $3.4 billion worth of Ethereum is just gone forever. Not hacked, not stolen, but permanently lost and impossible to get back, usually because of simple user error. It's a pretty stark reminder of the huge risks people still face in this space. Then there's this big shadow looming overhead, regulation and legal battles. You've got 5 major banks actively fighting against Ripple's banking license. Big tech giants are battling tax demands in Europe. The pressure is just mounting from every direction, and it signals a global push for more oversight and to bring crypto into the traditional financial rulebook. And this negative sentiment is being echoed by some really prominent voices. Robert Kiyosaki, the author of Rich Dad, Poor Dad, is out there telling everyone he thinks Bitcoin is a bubble that's about to burst.
Look, when influential people say stuff like that, it definitely makes you stop and think. Analysts are also pointing to some very specific technical red flags. For instance, there was a liquidation imbalance on Dogecoin so extreme, they literally called it insane. All that means is there was a massive lopsided amount of selling pressure, which can cause prices to crash fast. Big banks like HSBC are also warning of bubble risks. And like we talked about, the fact that altcoins are moving on their own away from Bitcoin, some see that as a sign of instability, not strength. Nothing captures this whole conflict better than looking at a single company like JP Morgan. In one headline, they're pushing the boundaries of innovation, hiring a new lead for quantum computing, and in the very next, they're stuck in a massive $1.1 billion lawsuit with a fintech firm. They are building the future and getting sued for it at the same time. So how do we make sense of any of this? Well, the reality is that the crypto market isn't simply a bull or a bear. It's a market that is fundamentally at war with itself, with all these powerful forces clashing in real time every single day. So let's just put it all right here, side by side. The bull case? It's fueled by real money and real development. We're talking record institutional investment, explosive growth in sectors like NFTs, and serious tech upgrades. But the bear case is just as real. Mounting regulatory pressure, absolutely insane volatility, billions lost to simple mistakes, and constant warnings of a bubble about to pop. And this is the key takeaway. This isn't a story of a good month followed by a bad month. All of it, the good, the bad, the incredible growth, and the catastrophic risk, is all happening right now simultaneously. The defining feature of this market is its own internal contradiction. Which leaves us with one last, really interesting question to chew on. In a market where massive growth and existential risk are just constant companions, is this kind of extreme whiplash-inducing volatility a flaw in the system that needs to be fixed? Or is it just an inherent fundamental feature of what this market actually is? Something to think about.